Assalamu alaikum wa rahmatullahi wa barakatuhu. My dear students, in previous lecture we have seen meaning and definition for debentures, that is, it's a source of borrowed capital to the company. In today's lecture we are going to see features and types of debentures. Coming to the very first feature of debenture, which is promise. Now see here, we have seen in the previous lecture, just like equity shares, when the company issues debenture, company takes money and gives debenture certificate to the debenture holder, that is investor who has invested money in debentures, who has provided loan to the company in the form of debenture, receives debenture certificate. So yes, in that certificate company writes at what percent company is going to pay interest, when the company is going to repay the amount. So everything that is written on that paper, that is debenture certificate, is nothing but a promise made by the company to the debenture holder. See, debenture is a promise by company that it owes specified sum of money to the holder of the debenture. It means that company has given in writing that company owes certain amount of money to the debenture holder, which the company is going to repay after certain period of time. So I can say that the piece of paper or that debenture certificate is nothing but a promise which a company makes to the debenture holder. Promise to repay the money along with the interest. That is after specified period of time, which is already mentioned in the debenture certificate. It's a promise. That written document is a promise. The second point here comes is face value. Now see here, when we were doing equity shares and when we are doing preference shares, we have seen what is face value. The amount that is written on the document is nothing but the face value, right? So now see, the face value of debenture normally carries high denomination. High denomination, it's 100 or in multiples of 100. The amount which is there, the face value of debenture is higher when you compare to preference shares or when you compare it to equity shares. Now what is multiples of 100 means? It can be 100, 200, 300, 400, 500. This is what? This is multiples of 100. So the face value carries high denomination, that is high value when it's compared to equity shares or preference shares. Your second feature is the face value. What is the face value? It is higher and in multiples of 100. 100, 200, 300. So the second one is face value, amount that is written on the debenture certificate. The third feature you have got is time of repayment, when the company is going to repay the amount. See, debentures are issued with due date stated in debenture certificate. When company it issues debenture certificate to the debenture holder, at that time only company mentions the due date, that is when the company is going to repay the money, time of repayment. The third feature, due date. Let's say company is going to issue debenture in the year 2020. On that certificate it would be mentioned that the company is going to repay the money. The company is going to redeem the debentures after 5 years. So can I say in 2020-25 the debenture the amount would be repaid, the debenture would be redeemed. See, the principal amount of debenture is repaid on maturity date. That one particular date in the year 2025 which would be mentioned in the debenture is the date when the company is going to repay the amount, the principal amount of the debenture. See, due date is the date on which something falls due, especially the payment of a bill. Principal amount we have already seen. See, principal amount is the amount of money one borrows. Let's say one debenture cost 100 and there is an XYZ person who has borrowed 5 debentures of a company. So can I say that company owes 500 to the other person, that XYZ person, company owns rupee 500 to that other person. So that 500 amount is the principal amount which the company is going to repay after 5 years. And maturity date is the date on which the life of a transaction or financial instrument ends. Maturity date, the due date or the maturity date that would be written on that certificate on which company is going to repay the money. So in short, what you are supposed to write is debentures are issued with the due date stated in the debenture certificate on that proof, on that promise, right? And the principal amount of debenture is repaid on maturity date. See here, in this example, this is an example of debenture certificate. See, the redemption date is written as 10th November 2016. Okay? And redemption amount is also there mentioned in the debenture certificate. So you see, these are the two, and along with the other, interest payable or at which rate. These are the other important informations that are mentioned on the debenture certificate. See here below, it's written 11th day of December 2012 the company issued the debentures and the company is going to redeem this on 10th of November 2016. So yes, all these dates are mentioned on the debenture certificate. The fourth point here you have got regarding the features of debenture is priority of repayment. Priority. See, this word is familiar to you when we were doing preference shares. Preference shareholders get priority over equity shareholders, we have seen. So now here, priority over repayment. So yes, debenture holders get priority for repayment before equity shareholders as well as before preference shareholders. See, debenture holders have a priority in repayment of debenture capital, debenture amount over the other claimants of the company. Claimants of the company claim, who has got the claim over the company, where the company is supposed to pay the debts, pay the liability. So yes, who can claim first before all the other claimants? Yes, debenture holders has got the priority to claim their amount. They have got the priority of repayment of the capital. See here in the sequence you can see that when at the time of repayment of the capital, debenture holder will stand first, then will come preference shareholders, and the last would be equity shareholders. Okay. The fifth point here you have got is assurance of repayment. Assurance means it's a promise, it's a trust, it's a commitment. Okay. Now promise of what? Assurance of repayment. See, debenture constitute a long-term debt. A long-term debt can be issued for 5 years, 10 years. They carry an assurance of repayment on due date. Assurance of repayment. Why we are focusing on the word assurance? Promise. See, because on that debenture certificate just now we saw that the due date, the maturity amount, and secondly the rate of interest, all the important information is written on that legal document. So yes, it's create an assurance of the repayment of the amount which is invested in the company by the debenture holders. Okay, there is always an assurance of repayment. There is always a trust. Company gives utmost trust to the debenture holder that no matter what, at the time of liquidation, or even if the company is not going to make any profit, company is going to give interest to the debenture holder, and company will give an assurity, company will give a priority to the debenture holder at the time of repayment of the capital. The sixth point here comes, and the most important point is interest. Why any XYZ person, or I can say why an investor will invest? To get the return on the investment. No one is fool in today's world to just give the money to someone else to use it, right? There should always be a return when a person tries to invest in any of the assets or the business. So yes, a fixed rate of interest is agreed upon and it is paid periodically in case of debentures. Periodically. Okay, whenever the company has mentioned, the company is going periodically, you can say that every year company is going to pay interest to the debenture holders. Secondly, the most important point, fixed rate of interest. No matter what, company makes profit or company doesn't make profit, company has to give interest to the debenture holder, and that too at fixed rate, the rate that is already printed on that debenture certificate. Yes, company is promising to pay that much percent of interest to the debenture holder. Now see here, payment of interest is a fixed liability of the company. This is what I said. No matter what, company is making profit or not making profit, company has to pay the interest to the debenture holder. It must be paid by the company irrespective of the fact whether the company makes profit or not. The seventh point you have got is parties to debenture. Now, who all are involved? Who are the parties that are involved when the debentures are issued by the company? The very first one is company itself. This is the entity which borrows money. Now, entity, firm, organization, one and the same thing. When the company borrows money from the other person. So yes, who is involved here? The very first party, company. Second, you have got as trustees. Now see here, trustee, who is a trustee to a company? A company has to appoint debenture trustee, and trustee is a person under whom the transaction or the dealing takes place, just to make sure that nothing goes wrong, okay, or no other person's interest is getting affected. See, a company has to appoint debenture trustee if it is offering debentures to more than 500 people. If the investors in the debenture exceeds, it's higher than 500, compulsorily company has to appoint debenture trustee. This is a party through whom the company deals with the debenture holder. Okay, the company doesn't come directly in contact with the debenture holder. Company appoints a trustee in between to deal with the debenture holders. This is a party through whom the company deals with debenture holder. The company makes an agreement with the trustees. It is known as trust deed. It contains the obligations of the company, rights of debenture holders, powers of trustee, etc. Now see here, apart from debenture certificate, when the company is going to issue debentures to more than 500 people, there is a trust deed that is prepared between the debenture holder, the company and the trustee, and in that deed all the obligations of the company, that is the very first obligation, company is the company has to pay the interest amount on time, the first obligation. Rights of debenture holders, if company is not in a position to pay the interest, the debenture holders has got the right to claim for the same. And the powers of trustee, if the company goes wrong, the trustee has got the authority to take whatever decision that is mentioned in the trust deed. And of course, the third party is debenture holder. These are the parties who provide loan and receive debenture certificate as an evidence, as an proof, the most important first feature. Okay, it's a promise, it's a evidence, it's a proof that the company has taken or the company has borrowed money from the debenture holder, and the company is liable to pay the same amount to the debenture holder along with the interest after certain fixed period of time that is mentioned in the debenture certificate. Clear? So there are three parties to the debenture: company, trustees and debenture holders. The eighth point here comes as authority to issue debentures. Who has got the authority? Who has got the power to issue debentures? Now let's take a general example. Who is going to manage the company, or I can say who manages the company on behalf of equity shareholders? Board of directors. Who takes the proper decision on behalf of equity shareholders? Board of directors. So yes, according to the Companies Act 2013, section 179(3), The board of directors has the power to issue debentures. Okay, after a certain period of time, the company is working well, the company wants to expand, and at that time the company requires additional capital. At that time, the board of directors will decide to borrow certain money from the public, and in this they will issue debentures to the public. The ninth point you have got as status of debenture holder. Very important. Equity shareholders, owners of the company. Exactly opposite. Debenture holder is a creditor of the company. It's a liability. It's a loan which a company is going to repay after certain period of time. So yes, most important, status of debenture holder. Debenture holder is a creditor of the company. Since debenture is a loan taken by the company, interest is payable on it at fixed rate. See, it's always, getting repeated. Interest at fixed rate, at fixed interval until the debenture is redeemed. Until the debenture is redeemed, that means paid off by the company. Company will give the money and will take the debenture certificates back. This is known as redemption. So yes, status of debenture holder. Debenture holder is a creditor of a company. The 10th point you have got is no voting right. When they are not the owner of the company, they have got no voting right in any of the general meetings of the company or the decisions which company take. See, according to section 71(2) of the Companies Act 2013, no company shall issue any debenture carrying any voting right. It's not allowed only by the Companies Act. Debenture holder has got no voting right. Debenture holders have no voting right to vote at general meeting of the company. Whatever the decisions company has to take or the company is going to take, debenture holders are not contacted for the same. When the company or when the board of directors want to take any of the decisions, they are going to call a meeting along with equity shareholders and no debenture holders. 11th one is security. Why person is going to invest in debentures? See, debentures are less risky when compared to equity shareholders. See, this point will clarify the difference between the two. Security. See, debentures are generally secured by fixed or floating charge on asset of the company. Charge on asset of the company. We have seen this in previous lectures. To have a charge means you have got the right on that particular asset. Let's say in the debenture certificate, company will mention that if company is not in the position to repay the amount of the debentures, the debenture holder can sell any of the property of the company and take their money. So can I say the debentures are secured? The debenture holders have the security of the repayment of money. See, if a company is not in a position to make payment of interest or repayment of capital, the debenture holder can sell off charged property. Now, charged property means that one particular asset. Let's say company has mentioned in the certificate that if company is not in position to, pay the interest or pay the capital amount, at that time debenture holders can sell the furnitures and fixtures of the company and they can take the money. So yes, see, the debenture holder can sell off charged property of the company and recover their money. See, here in the diagram you can see that here, if company is not in a position to make payment of what? Interest or repayment of capital, debenture holder can sell any of the property or asset of the company. Now, see, you have seen these two words, fixed charge and floating charge. You can see here. See, what is fixed charge? Security over specific asset. If I have mentioned furnitures and fixtures, specific asset belonging to the company, that is fixed charge. See, asset cannot be sold or disposed of without the company obtaining the consent of the lender, the bank. Here, it's just an example. If the company has taken a loan from the bank and has kept certain asset to the bank, or has declared that whether if the company is not in position to pay the money, the bank will sell the asset at that time. This is known as fixed charge. The second one you have got as floating charge. Security over a class of assets that are changing in nature. The amount or the value fluctuates. Let's say that the company has kept a security as any of the property where the amount fluctuates. See, the examples are stock, finished articles, or raw materials, okay, where the price may hike or the price may get deducted. At that time, those assets where the prices are fluctuating, those assets are known as are considered under floating charges when it's kept as a charge on asset with the debenture. The 12th point you have got as who can issue debentures. Here it's very simple. Both the companies, private or public, can issue debentures. See, debenture can be issued by both private company as well as public company. The 13th point or the 13th feature you have got as debentures listing. Listing, to list means to put there, to list something, to put. To see here, debentures must be listed with at least one recognized stock exchange. Now you have got two stock exchanges here, that is Bombay Stock Exchange and National Stock Exchange. So yes, at the time of issuing, the company has to list their debentures in the market. For shares and debentures, you have got stock market. So it should be listed, it should be there in any one of the recognized stock exchanges. Here the example you can write as Bombay Stock Exchange or National Stock Exchange. The last point or the last feature regarding debenture is transferability. To transfer means to hand over to someone else. See, debentures can be easily transferred through the instrument of transfer. Instrument of transfer means there would be a form you have to fill that this A, B, C person wants to transfer the share to XYZ person. So yes, there would be a the instrument of transfer, or I can say a transfer form, which a debenture holder is supposed to fill, and this could be easily transferred to someone else. So yes, there are 14 features which we have seen. Let's have a glance. It's a promise. Why it's a promise? Because the company issues debenture certificates and all the other important informations are written. Second, you have got face value. The denominations are high, 100 or multiples of 100. Time of repayment, the due date, the maturity date, everything is written on the debenture certificate. Priority of repayment, fourth, most important. I'm sorry. Priority of repayment, they have got the priority over equity shareholders as well as preference shareholders. Fifth one, assurance of repayment. Why assurance of repayment? Because everything is mentioned. Company has issued debenture certificate, which is a legal document. So yet it's given assurance that the repayment would be done. Sixth one, most important, what you get, what debenture holders get when they invest in the company, they get interest. Seventh one, you have got parties to debentures. There are three parties to debenture, the company itself, the trustees, and the third one, debenture holder. Authority to issue debenture. The eighth point, who has got the authority? Board of directors have got the authority to issue debentures. Then the ninth one you have got as status of debenture holder. Company is going to repay the amount. It's a liability for a company. So yes, debenture holder is creditor. The status of debenture holder is as of creditor. 10th one, no voting right. Debenture holders have got no voting right. 11th one, security. Security by, having a fixed charge over the asset or the floating charge. 12th one, issuer. Who can issue? Both the companies, public as well as private company, can issue debentures. The 13th one, listing. The company has to list its debentures in any one of the recognized stock exchanges. You can write example as Bombay Stock Exchange or this National Stock Exchange. And the last one, 14th one, is transferability. The transfer through any of the instrument of transfer, the XYZ person can transfer the debenture to the other person. Transferability is very easy. So here we come to an end with features of debenture. Now we are going to see the types of debenture. Okay, there are 8 types of debentures on certain basis. We are going to see it now. Okay, the 8 types of debentures. Now see, on the basis of security, you have got secured debentures, you have got unsecured debentures. On the basis of transfer, registered debenture, bearer debenture. On the basis of repayment, whenever there comes repayment, it's always redeemable, irredeemable. And yes, on the basis of conversion, convertible, non-convertible debentures. Now we are going to see each one of them in detail. Coming to the very first one, secured debentures. We have seen one point as security in the feature. This is what we are going to see here. Now see, secured debentures. The debentures can be secured. The property of company may be charged as security for loan. The security may be for some particular asset fixed charged, or it may be the asset in general floating charge. The debentures are secured through trust deed. What is deed? Deed is nothing but an agreement. See here, what is trust deed? Trust deeds transfer the legal title of a property to the third party. Let's say company has got land and building, okay, or a company has got a warehouse under the company's name. So whenever there would be a trust deed, the company will say that this XYZ warehouse belongs to the debenture holder. That is, it creates a fixed charge. And if the company is not in position to repay the money, the debenture holders will sell the warehouse and will take their capital back. See, trust deeds transfer the legal title of a property to the third party, such as a bank, to hold until the borrower repay their debt to the lender. So now this warehouse will be with the third party, that is bank. See, we have seen trustees to, there is one party, trustee to the debenture holders. Yes, we have seen the company, the trustees and the debenture holder. So now when the debentures are secured, their warehouse, that title, or I can say the legal documents of that warehouse, will be with the third party, that is trustee. And if the company doesn't pay, the trustee is supposed to sell and is in position to repay the amount to the debenture holder. Okay, so this is, here comes secured debentures, secured through any of the assets of the company. Second, exactly opposite, unsecured debentures. These are debentures that have no security. The issue of unsecured debentures is now prohibited by the Companies Act 2013. In today's date, no one or no company is allowed to issue unsecured debentures. It is prohibited by the Companies Act 2013. Your third comes as registered debenture. The word registered itself says that there is something in writing. Now see here, you can see a register. Just like your attendance register you have got, when you take admission in any of the class, your proper register is maintained. Now in your register, it's just an example, in your register you have got all your important details, right? Your GR number, your roll number, then your name, your date of birth, your contact details, your address. So now these are the important information that is there in your attendance register. Likewise, when the company maintains a register for debenture holders, those debentures are termed as registered debentures. See, registered debentures are those debentures on which the name of holders are recorded. A company maintains register of debenture holders in which the name, address and particulars of holding. Now particulars of holding, that means how many debentures you are holding, 1, 2, 10 or whatever of debenture holders are entered. So see, these are the important information that is mentioned in the register of debenture holders. See, the transfer of registered debentures require the execution of regular transfer deed. Now let's say if the company is going to issue registered debentures, at that time when the company will give you debenture certificate, on that certificate your name and other important details, that is particulars of holding, would be mentioned. So now when you want to transfer your registered debentures, you have to go through a proper transfer deed. We have seen in the feature as transferability. So yes, you have to fill a form that this debenture was under my name, but now I want to transfer this registered debenture to someone else. So yes, here is the name of the other person to whom I want to transfer my debentures. So yes, the person who wants to transfer the registered debentures has to go through transfer deed. See, what is execution? See, the transfer of registered debentures require the execution, fulfillment, or I can say the completion. You have to complete the form. You have to execute the regular transfer deed. See here, it's an example of a register of debenture holders. You can see the important details that are here. You have got the folio number, then you have got the name, address. So this is how the register of debenture looks like. Okay. Now the fourth one is bearer debenture. See, name of the holder are not recorded on the bearer debenture. You have done, when you were doing in 11th standard as checks, right? You have got cross check, you have got bearer check. So what is bearer check? Whosoever holds the check is the owner of the check. So see here, name of the holders are not recorded on the bearer debentures. Their name do not appear on the register of debenture. When there is no name, there comes no point for the transfer, filling of the transfer form and everything. See, such debentures are transferable by mere delivery. What is mere delivery? It's just like you are handing over a document to someone else. It's as simple as that. Payment of interest is made by means of coupons attached to debenture certificate. Okay, there would be certain small coupons that are attached to the certificate. So the bearer or the holder of the debenture can, is entitled to get the interest by giving coupons to the company. Now see, this is an example of bearer debenture. You can see the debenture certificates, and these are the small coupons that are attached. Whenever these coupons can be taken to the company every year or every fixed period or every fixed interval. Your fifth debenture is redeemable debentures. Debentures are mostly redeemable, that is payable at the end of some fixed period as mentioned on the debenture certificate. Redeemable, the company is going to get back the debenture certificate and company is going to repay the amount. See, repayment can be made at fixed rate at the end of specific period or by installment during the lifetime of the company. Now repayment can be done at fixed date. Okay, at the time of maturity, company is going to repay the amount, or at the end of specific period, just now we have seen, or by the installment during the lifetime. Let's say installment, if the company has issued debenture for 5 years, so company can, at that fixed installment, the company may say that I'm going to, repay the amount every year, a small amount every year, and in this 5 years I'm going to repay the amount back. The provision of repayment is normally made in trust deed. Trust deed we have seen. Now sixth one is irredeemable debentures. See, these kind of debentures are not repayable during the lifetime of the company. If I say that Irredeemable, that means company is going to utilize the capital that is invested by the debenture holders till the lifetime of the company. They are repayable only after the liquidation of the company or when there is breach of any condition, breaking or neglecting any of the power of the debenture holder. See, or when there is a breach of any condition, I said any of the power of the debenture holder, or when some contingency arises, contingency happening or non-happening of an uncertain event. At that time, company is going to pay the amount back, or else if it's an irredeemable debenture, company is going to utilize the amount till the lifetime of the company. Seventh one you have got as convertible debentures. Debentures can be converted. Now we are going to see in what. See, convertible debentures give a right to the holder, a right to the debenture holder to convert them into equity shares after specific period of time. Such right is mentioned in the debenture certificate. At the time of issuing, the company will mention in the debenture certificate that after 5 years, company is going to convert these debentures into equity shares. See, the issue of convertible debentures must be approved by the special resolution in general meeting before they are issued to public. Okay, the company has to take a special resolution in the general meeting along with the equity shareholders that the company is going to take this decision that after certain period of time, company is going to convert this capital into permanent capital. Company is going to convert this borrowed capital into permanent capital, that is converting debentures into equity shares. See, these debentures are advantageous for the holder. Why advantageous? See, because of this conversion right, convertible debenture holders is entitled to equity shares at a rate lower than the market value. Let's say you have bought the debentures, one debenture for rupee 100, but now when at the time of conversion into equity shares, the value of that one particular equity share is maybe 150 or 200. So you can say that in rupee 100 or in this rupees 100 you are going to get equity share which is costing 150 on that date in the market. So I can say the convertible debentures are always advantageous to the investor. Here comes the eighth one as non-convertible debentures, exactly opposite. Non-convertible debentures are not converted into equity shares on maturity. That means the company is supposed to pay money back to the debenture holders. See, these debentures are redeemed on maturity date, paid off by the company. These debentures suffer from the disadvantage that there is no appreciation in the value. As we have seen, when it's getting converted into equity share, one debenture was costing 100. At that time, that equity share was for 150. So yes, there was an appreciation of rupees 50. But here, non-convertible debenture is disadvantageous as it's not getting any appreciation in the market. So yes, with this we come to an end with the types of debentures. In today's lecture, we are done with features of debentures and types of debentures. See, these are the two different kinds of questions which can be asked in the exam. And yes, my dear students, thank you, and that's all for today.